Welcome back to Upside Down Data. We really need to talk about altcoins. The last few days have been absolutely brutal for altcoins. We can look here, if we just look at the total crypto market minus Bitcoin and Ethereum, and then I also excluded here USDT and USDC, them being stable coins, probably less interesting when we're talking about volatility. You can see that we're down from those local highs there, 21%. So the altcoin market has not been doing very well recently, and this has gotten a lot of people very concerned. Some people are even saying the bull market is over, see you again in 4 years. Basically, the idea is that the cycle is over. This was all we were going to get out of altcoins that we already saw, and the end is in sight. But I want to talk about, should that be our base case, or is there more to the story than just that? So to do that, I want to look at the data. I don't want to just follow emotion and narratives. I want to see what models and objective data can tell us about what's going on. And fortunately, our models that we have here at Upside Down Data and over at our website, polaritydigital.io, can help us to do that. So what I want to show you here is a little bit different from what I usually show you in terms of our models. So in here, instead of showing the model for an individual asset, what I'm instead doing is showing you an aggregate model across a bunch of different altcoins. So what this is our long-term upside downside potential indicator. It's our risk model that we have here. And what I'm showing you is basically the average risk of not just one asset. So I have the price of Solana here in the background just as a reference point for where we are kind of in time. But then in terms of what this line here, this red line is actually showing you, is I have the UDPI for Solana. So I can pull that up here. This is the actual Solana UDPI long, but I also have it for BNB, for XRP, for ADA, for AVAX. Basically the top 8 altcoins by market cap that we have UDPIs for, those are what are being aggregated into what this red line is. And this is the formula for what you're seeing here. It's basically just the average of all of those. So just, add them all together, divide by the total number, in this case 8, gives you the average. And what's useful about that is it can give you a sense of when is the market overall looking overheated. So instead of just one individual asset, you're looking across a bunch of them, and it can actually give you a nice sense of the market as a whole. Is it overheated, or is that a pretty low risk point most likely? And again, this Solana price here is just for reference. This is not directly just Solana, it's all 8. And so what you can see is that there are these points where the market is overheated. So for example, back in early to mid 2021, we know that the market was very overheated at that time, and then we got that big correction. And then we had that second run. And so Solana and a number of other altcoins pumped really hard during that time. Then we went into the bear market. But then going into December of last year and March this year, we saw large altcoin rallies. We can just see that looking at the market caps here. We can see this big rally into December, some cooling off that happened with alts then, and then the second leg up. And that's what's being reflected here. The big move up, risk reset, moved back up, and now it's reset deeply. And I think what's going on here is what is really interesting. This deep reset that we're seeing on the average risk, this average long-term risk. And so we're way lower than we were just back through here. And that's a good sign, I think, because one of the things that you'll notice is that these combination market cap that we're seeing here, it still hasn't even broken new lows ever since the top that we saw over here in March. But yet risk is substantially lower now than it was back then. And I think that is a hopeful sign. So I'm not going to call for a bottom. I think it's possible that we continue moving down from here and have more pain. But certainly we're getting towards those levels that have historically acted as low points for the broader market. For example, here, from June 2022 all the way through about September 2023, just look at the chart here, you'll notice that these line up with notable bottoms. This kind of big accumulation zone down here before we took off, that's what we're seeing right here, generally low risk. And so we're now back in that range. And so this was a great accumulation zone for alts already back here. Maybe it will be that again here, even if we have a bit lower to go before that happens. And also there are probably going to be some alts that would continue to bleed more than others. Some might already have put in their bottoms. Other ones might have further to go. It's not going to be uniform. But across the board, it would not surprise me to see some kind of a bottom form in the not too distant future, even if more pain has to happen first. So why am I then thinking that this could just be a dip for accumulation? And why am I not thinking this is just a bear market that we're going into for altcoins? So that's a great question. One of the things we can look at is our forecast model. So this is the exact same exercise I just showed you with the UDPI, But instead of risk, we're looking at the average forecast model output. So the forecast model, if you're not familiar, is basically what is the likelihood that the price of a given asset, in this case it's the aggregate across all these assets, will be above where it is right now 6 months in the future. So really high levels mean that there's a high chance of upside in 6 months. So for example, 0.88 would be an 88% chance of upside. And then vice versa, down here for 0.1, for example, we only had 10% chance of upside. And so you'll see that, for example, back here in early 2021, it was quite bullish, and it was right to do so. We saw some notable upside in alts over that period. But then we went into the bear market. As we got later on in 2021, it got really bearish, and that led then into the big bear market. But then right on time, as we got into the bottom, it got bullish again. It really flipped bullish up through here, and then off to the races alts went. And so the good news from that perspective is that it remains bullish, up at 82% chance of upside in 6 months across this variety of altcoins that we're looking at here. So some it'll be higher, some it'll be lower, but overall that is the aggregate outlook. And so when I look at that, it seems reasonable then to hold a bullish outlook, that nothing has really changed yet from this model's perspective, at least in any notable degree. There's volatility, sure, we're not as high as we were back here, but it's not anything to be especially concerned about just yet. So when I look at this, it seems hard to be especially concerned from that perspective in the longer term. Now, obviously, if things turn for the worse, my outlook will change. And this doesn't mean that we're just immediately going to go off to the races. Again, more pain could have to happen first before that happens. But it's a positive sign. So that's where I think a lot of this bearish sentiment could be a good thing. It could mean that we're going to get to a point where the sellers are getting exhausted. Everyone who wanted to sell has already sold. And then maybe demand can start outstripping supply again, and we can see a resumption back to the upside. We might have to take some more time for that to happen, but it does look like in the longer term data, this is looking like a reasonable accumulation zone for risk in terms of risk. And also the forecast model remains bullish, which I think is a good sign. So obviously none of this is financial advice. You should make of this as you will. And if you want to look at these data for yourself, you can do so over at our website, claritydigital.io, link in the description. And the final thing I wanted to talk about that also makes me not be especially worried yet is what's going on in broader markets. Look at the stock markets. This is the S&P 500. New all-time high today as I record this. I record this here on the 18th, closed at a new all-time high. NASDAQ right around all-time highs here. Now, Dow Jones not quite so high, but 2 of the 3 major stock indices here closing at or in new all-time highs. That's not a bearish outlook for risk assets, in my opinion. Now, that's not to say that everything is perfect in the macro space. You can look at the DXY, which is the strength of the dollar relative to a basket of other fiat currencies. And this tends to be inversely correlated with crypto. When the DXY is doing well, crypto tends to do poorly. When the DXY is doing poorly, that's when crypto tends to do well. Look, for example, here, October into December, see the DXY falling off a cliff. That was one of the points when crypto did exceptionally well, going on this big pump here that we see through this leg here. And you can see this if you look more broadly, that in the periods that DXY is doing well, crypto tends to do poorly. So more recently, one of the things I've been talking about that's been concerning or not ideal for crypto is I've been in this local uptrend, really ever since December, this local uptrend on the DXY. And so I would like to see this reverse. If this were to really reverse heavily to the downside, that would be a positive sign in my view that might give more tailwinds to crypto. But certainly when you take this all together, it's hard for me to be especially concerned with this backdrop. Nothing has really changed in this perspective that would get me especially worried. And so far, so good. Now, obviously, it's maybe concerning that altcoins have been so weak while the stock market's been doing so well. But another way they could look at it is that they got pretty ahead of themselves. And you look in the aggregate, we haven't corrected that much, especially relative to what crypto has shown in the past it is able to do in terms of correction. This is kind of a garden variety correction to some degree so far. Now, if it got especially worse, that might be more concerning. But so far, this is not anything too crazy that we're seeing so far in terms of how we look at it right now. So to wrap us up then, I think the broader view has remained unchanged in my view. This seems to be a dip that in some ways might just be good to kind of flush out a lot of the leverage, reset sentiment, and allow maybe things to resume to the upside. But if the data turn, I will turn as well. I'm not just going to be blindly bullish. I'm going to be following the data and do what they say. But right now, I'm not seeing it's too many signs to be especially concerned, but certainly I think it's worth watching. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates with our models and more over there. And go to our website, polaritydigital.io, to see live data from our models and more.